Hey there, wonderful viewers. Welcome back to Fiend Ideas. I'm Rashmi, and today we are diving into a topic that's going to open your eyes to a whole new world of investing, index investment. Whether you're a seasoned investor or just starting out, you're in for a treat. So, grab your favorite snack, hit that like button, and let's demystify the magic of index investment. Now you would be thinking, what on earth is index investment? Okay, let's start at the beginning. Index investment, in simple terms, is like riding the market roller coaster without picking individual stocks. Imagine investing in a way that captures the overall market performance. Sound intriguing? Well, it is. 1. Defining index investment. Index investment refers to a strategy in which investors seek to replicate the performance of a specific market index, such as the S&P 500 or the Dow Jones Industrial Average, rather than attempting to outperform the market through active stock selection. This approach involves constructing a portfolio that mirrors the composition of the chosen index, either by holding all or a representative sample of its constituent securities. The goal of index investing is to achieve returns closely aligned with the overall market's performance, while minimizing the costs and risks associated with active management. 2. Comparing index funds to active funds. Index funds and active funds represent two distinct investment approaches. Index funds aim to match the performance of a specific market index by holding a diversified portfolio of securities that mirrors the index's composition. They generally have lower fees and require less active management since they follow predetermined rules. On the other hand, active funds involve fund managers making selective investment decisions to outperform the market. 3. A peek into the beauty of diversification. Diversification is a powerful investment strategy that involves spreading investments across a variety of assets to reduce risk and enhance potential returns. The why behind index investment. Now, you might be wondering, why should I even bother with index investment? Trust me, the reasons are as sweet as that piece of cake you have been eyeing. 1. The low-cost superstar. 2. Consistent returns and market averages. 3. Time-saving strategy. 4. Ideal for beginners and busy bees. Now, why to invest in index long-term strategy? 1. Rich retirement. Have the funds to live the kind of life you want to live post-retirement. 2. Beat inflation. Inflation is a silent wealth killer, stand the test of time. 3. No stress. Just growth. Times of stress are also times that are signals for growth. 4. Invest now. Pay later. Tide over the problem of fund crunch and secure your future. When you engage with Fiend Ideas, you'll gain access to a range of benefits that can enhance your financial experience. One of the key advantages is the emphasis on total transparency, ensuring that you're well informed about the processes and actions taken. Another notable feature is the ability to execute trades directly in your personal account, giving you a hands-on approach to managing your investments. This control extends to your portfolio, where you have the authority to make decisions that align with your financial goals. Unlike mere trading, Finedias focuses on investment strategies, harnessing the power of compounding returns over time. Additionally, the platform allows you to capitalize on market fluctuations, potentially leading to profits. Moreover, by participating, you can save on interest related to your capital. To further cater to your preferences, Finedias offers options like systematic investment plans, SIP, and systematic withdrawal plans, SWP. Overall, engaging with Finedias offers a comprehensive and strategic approach to investing that empowers you to make the most of your financial endeavors. Advantages of index investments. 1. Diversification. One of the key benefits of index investing is the automatic diversification it offers. Since index funds hold a wide range of stocks within a specific index, your investment is spread across various industries and companies, reducing the risk associated with individual stock volatility. 2. Low costs. Index funds are known for their cost effectiveness. Since they don't require the constant monitoring and decision making of active management, the associated management fees are typically much lower. This allows investors to keep a larger portion of their returns over time. 3. Consistent performance. While active fund managers may outperform the market in some years, index funds tend to provide consistent, market-matching returns over the long term. This predictability can be beneficial for investors seeking stability in their investment journey. 4. Simplicity. Index investing is relatively simple to understand and execute. It doesn't require an in-depth knowledge of individual companies or industries, making it accessible to a wide range of investors, from beginners to experienced professionals. Getting started with index investing. 1. Define your goals. Before diving into index investing, determine your financial goals and risk tolerance. Are you saving for retirement, a major purchase, or simply building wealth over time? Understanding your goals will help you select the appropriate index funds. 2. Choose your indices. Research various indices that align with your goals. Each index reflects a different segment of the market, so choose ones that match your investment objectives. 3. Select index funds. Once you have chosen the indices, look for index funds or exchange-traded funds, ETFs, that replicate their performance. Compare expense ratios and historical performance to make informed decisions. 4. Allocate funds. Allocate your investment funds across different index funds to create a diversified portfolio. The allocation can be based on your risk tolerance and desired exposure to different market segments. 5. Stay the course. Index investing is a long-term strategy. Avoid making impulsive decisions based on short-term market fluctuations. The goal is to ride the market's ups and downs while benefiting from its overall growth over time. 6. Regular rebalancing. Periodically review your portfolio and rebalance if necessary. Keep learning, keep investing. Thank you for joining me today on this index investment adventure. Remember, you don't need a crystal ball to make smart investment choices. Comment down below what are your thoughts on index long-term strategy. If you enjoyed this video, give it a thumbs up and hit that subscribe button to stay tuned for more financial wisdom. Until next time, keep learning, keep investing, and keep having fun. Happy investing!
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.